A very good afternoon and welcome to HYCM's live market analysis with myself, Giles Coughlin, Chief Currency Analyst. A very warm welcome to you. Looking forward to explaining the latest NFP jobs report and what we can look forward to this week in terms of the Reserve Bank of Australia interest rate statement. So plenty to cover. If you could just make sure you can see my screen and hear my voice okay. If you just use the question and the chat box, that will help you during the session, just to make sure everything's loud and clear for everyone. Good to see some good names here. Very pleased you could make it. Looking forward to talking us through what's going on. Okay, as many of you be aware, as we look at this live market analysis, the whole perspective as we look ahead to the coming week is all about how someone with a professional trading background, look at the market. So even though we talk about different entries, exits, stops, instruments for trading, it's not a signal service. Instead, it's an educational service. So you look at my approach, and then you can understand over time how those market dynamics play out week to week. So these are the topics we're going to be looking at. We're going to be looking at the medium-term outlook for the pound, and whether we're still bullish. We're going to look at the latest NFP jobs report from last Friday. Just going to run through what the market was expecting and what we can anticipate right now. We're looking at OPEC Plus. Again, that decision is still to be in. So we'll be looking at that, whether that's going to be supporting oil prices. We'll be looking at gold and the Fomc minutes due this week and what's noteworthy in the major FX pairs. We'll be looking at a few reversal signals that we can see, and the RBA rate statement. So we really do have plenty to be looking at today. I will now move us across over to my other screen. There we go, super. Right, well, the first thing I'm going to look at is what's the medium outlook for the pound. Now, the pound is seeing some strength today, and the pound US dollar pair, for the following reasons. PM Johnson is due to outline later on today in the UK how the July 19th reversal of COVID-19 restrictions is going to play out in the UK. So it'll cover things like social distancing rules, face covering, whether people are expected to go back to work, whether the stay-at-home schedule is still in place. So the pound is finding some strength. Now, what's going on in the UK at the moment is the following. If you just take a look here with our partners, Financial Source. I do a lot of work for Financial Source and provide some great market information that as a HYCM client, you will have access to. So, you know, if you're not yet an HYCM client, you do get a lot of bonuses by doing this. Now, if you look at the number of cases in the UK, you'll see they're rising rapidly. So why is the UK preparing to exit lockdowns? Well, the reason is, despite rising cases, the hospitalizations has not been rising at the same rate as cases. So that means in the UK, we're now seeing the link between COVID-19 cases and hospitalizations is really weakened. Now remember, in one sense, if people get COVID-19, as long as they're not going to hospital, as long as they're not dying, then we're going to be learning to live with it in the UK. Very similar to what happened in Israel. 3 out of every 5 of Israel's population is fully vaccinated. Over 50% of the UK is now fully vaccinated, and Israel and the UK are both learning to live with COVID-19. So the outlook for the pound remains strong. We also see that the UK has 180 billion pounds of pent-up savings ready to be spent in the UK economy. If we look at the last central bank decision from the Bank of England, what we see is that Bank of England, you can check out my blog here, and I go through pretty much every single central bank decision. They've revised up growth and inflation. So yes, Andy Haldane, one of the hawkish members of the MPC, the most hawkish member, has left now the Monetary Policy Committee. However, growth and inflation are expected to be revised upwards. So that's why we're seeing some pound upside against the dollar. We'll come into the dollar. I am expecting pound strength over the medium term. So if you looked at something like the pound Australian dollar, euro pound, for instance, I'm expecting downside in the euro pound. And if you look at the pound Australian dollar, I'm looking particularly at this currency pair in case we have a very bearish Reserve Bank of Australia meeting tonight. So we'll cover that in some detail, because if The cases are rising rapidly in Australia now. The Delta variant is ripping through the population. Now, Australia, if you look, compared to the UK, Australia have only vaccinated 6% of their population. So the rise in COVID-19 cases in Australia will result in hospitalizations and deaths increasing. So Australia has to contain COVID-19. So it means that the Reserve Bank of Australia is probably, is more likely to be dovish when they meet later on this evening. So you can see there's a potential divergence here between the UK and Australia that would favour potentially some strong upside in the Australian dollar, in the pound Australian dollar pair. So look out for that. That's one thing. We'll cover that in a little bit more detail. But yes, medium term, the outlook for the pound is still bullish. So something like the euro pound short is still a legitimate trade to consider. Now, next point, what can we learn from the latest NFP US jobs report? Right, well, looking at jobs, if you go back to last week, we saw ADP jobs came in very strong at 692,000, okay? That gave the market optimism last week that the non-farm payroll jobs on Friday would come in very strong. Now remember, the Fed want to see employment return to normal levels. If employment returns to normal levels, that means the Fed's going to taper bond purchases earlier. They're going to raise interest rates earlier, so that's dollar positive. So that is why, and I was talking about this all last week, that's why we're expecting dollar strength into Friday, and that's exactly what we saw. On Monday, the non-farm payroll was revised up to 750,000 extra jobs expected, and it moved higher. But this is the crucial thing. I was covering this on Friday on Twitter. I was doing lots and lots of videos on this, but we were expecting a buy the rumor, sell the fact response if we got market within consensus. And you can see the consensus was 725,000 jobs. We hit 850,000. Now that was below the maximum market expectations of 1 million jobs added. So that meant that jobs number was good, but it wasn't more than the market was expecting. And the unemployment rate was bad, 5.9%. So that was more negative. So we saw a buy the rumor, sell the fact response in the dollar. That's where the dollar put in a bit of a retracement on Friday, and you can see that we saw on the major pairs quite a few reversal candles, reversal in the Aussie US dollar, reversal in the Euro US dollar, so that nice pin bar, reversal in the New Zealand US dollar. So we've got a little bit of near-term dollar strength now, dollar weakness rather. Now we are not got a strong view on the dollar at the moment because the dollar is looking at the data. It wants to see some clear evidence whether the Fed is going to taper bond purchases and increase interest rates more quickly. If it does, then expect dollar to strengthen again. But at the moment, that last jobs data print was just seen as a little bit of a disappointment. That's why we've seen the dollar weakening. Now we have a holiday. It was Independence Day on July the 4th. So now we have a holiday in the US for Independence Day. So we will have to see how the market goes back on Tuesday. Now, equity markets traded a little bit higher, those equity futures markets. And the reason they traded higher was because the Federal Reserve was being seen as had less reason to raise interest rates. Now, if the market thinks interest rates are going to rise, equity markets will fall because rising interest rates mean that the debts that companies have will cost more to service, which means companies' profits will be hit, which means their valuations will fall. So as long as interest rates are low and are expected to stay low, expect equity markets to keep moving higher. Analysts at the moment are waiting for a correction in markets. So if the Federal Reserve or if some data comes out of the US that really makes us think, yes, the Federal Reserve is going to raise interest rates more quickly, they're going to take up bond purchases, expect equities to fall. The world's indices are very, very highly valued at the moment. Wouldn't favor buying in at these high values. The only major world index that I really like personally is the FTSE 100. Do you see? If you look at the FTSE 100, compare that to say like the DAX You see the German DAX. You see this fall. That's the COVID-19 fall. Do you see the gaps filled? Look at Euro stocks. Do you see that sharp fall? You see the gap filled? Look at it with the S&P 500. You have that sharp fall in COVID-19 and then the gap filled. All those gaps have been filled, but the FTSE 100, that gap here is still to be filled. So I think there is high probability of the FTSE 100 moving up to 7,500 in the next 3 months. So I am positioned long for the FTSE 100 to move up into that 7,500 region. I also see potential for the FTSE 100 moving up even higher, up towards that 8,250 region. We will have to see how things pan out. However, that is my bias in the FTSE 100 at the moment, and I think that's the only index that offers value. The rest of the indices are very highly valued. Remember the VIX? This is the volatility index. When the VIX rises, stock markets fall. Okay, so if you just put, let's just put the S&P 500 onto this chart, and what you'll see is that when the VIX rises, S&P 500 falls. VIX rising, S&P 500 falls. Look, VIX rising, S&P 500 falls. So as long as the VIX stays pressured lower, expect the S&P 500 to keep rising. If we see a sharp spike in the VIX, then we'd expect stocks to fall. So if you're trading stocks at the moment, just keep your eye on the VIX, and that will really help guide you. Okay, now we're going to look at OPEC Plus. Now, OPEC Plus has a problem, and I'll just run through what the problem is here. Now, the problem with OPEC Plus is between Saudi Arabia and the UAE. Now, the UAE want to increase their production levels. Now, OPEC, Saudi Arabia, don't want UAE to produce their production levels, because if they allow the UAE to increase their production levels, then it means Russia and other countries say, well, we want to increase our production levels too. The UAE, they want to boost their production levels because they don't want to be locked into low production for the next sort of 18 months. So we now have a battle. And the battle that's going on is that UAE and Saudi Arabia are struggling to come to an agreement about production levels. Now, at the moment, right, just show you, this is what you need to look for, and this will be the way to manage this. Here we go. Now, the thing to look at is to do with the agreement reached. If they end up agreeing 400,000 barrels production cuts tapered until the end of next year, then that's a big boost for oil upside and upside for CAD. Remember, the CAD and oil, CAD is a petrocurrency. So whenever oil goes up, that helps support CAD as well. The Russian ruble, the Norwegian krona, the Canadian dollar are all so-called petrocurrencies. When oil rises, their currencies rise as well. Why? Because these countries export a lot of oil. As a result, oil prices boost the income for that country. If the income's being boosted, the country's doing better. That's a bullish outlook, so their currency rises. If they agree to cut to those 400,000 barrels per day production cuts, but it doesn't run until the end of 2022, then just expect flat price action. If there's no agreement reached, and if the UAE, this is the crucial bit, if they threaten to walk away from OPEC unless they can have a higher baseline, that is downside in oil. Now, looking at oil, the medium-term outlook for oil remains strong. Why? Production is low. The world is vaccinating its inhabitants. The general perspective is that airline travel is going to come back. Demand should come back in for oil. Now, personally speaking, I don't want to buy oil up at these highs. You see that 75 region, clear overhead resistance. I don't want to be buying into resistance. So if we see oil pull down to that 68, for me, that's a clear buy. So if the UAE did walk away from OPEC, then, and we saw another price war going on, we'd expect oil to fall, but down to that 68 level would be still an opportunity to buy on dips. So medium term, the outlook is still bullish for oil. It's a great opportunity potentially, but we would need to see price move to that 68 and then I would like to have my stops running about 63, okay, and then looking for a retest up to 75. It's a good risk reward. On an intraday chart, it will be possible to look at a retest of this trend line, so any move that down to that 74 region, depending on the reasons why, you'd expect to find buyers as well, but I'm not interested at buying at these levels. We're next for gold. Now, gold has some very interesting moves going on. Now, if you just take a look at the real yield chart, remember this is a key chart for looking at gold. Real yields is the nominal bond yield minus inflation expectations. So, in other words, if you have a bond, remember bond is basically when you're lending money to a government. So a US bond is when you lend money to the US government and they give you money for lending them money. So you can see here's a 10-year government bond, it's 1.43. So that means that if you were to lend money to the US government for 10 years, say you were to lend them $1,000, they would give you 1.43% every year for the next 10 years. That's the yield of the bond. Okay, almost like that's your reward for lending them money. Now, US government treasuries are seen as one of the most reliable investments that you can make because the US government is seen as so reliable. Now, obviously, this is the yield of the bonds, but you have to allow for inflation. Now, inflation is the cost of goods, the prices rising for costs of goods and services. So if inflation is above the US 10-year yields, that means the actual yield of the bond would be negative. Now, looking here at real yields, you can see that real yields are actually minus 1.63. So because inflation is high, that means by the time you take inflation off of the yield, that means real yields are negative. When real yields fall, that's a boost for gold. Do you see how the orange line, real yields, has pushed through that trend line? Real yields are dropping, and that's boosting gold higher. So I am expecting upside in gold, and I am personally long gold at the moment. I'll show you where I am. I'm long gold from the non-farm payroll data, and you can just see here, we have a false break of a Harami inside bar. So you see here, we've got an inside bar pattern. That's a false break on the non-farm payroll data. And you can see that price is looking for a technical test up that 1816 region, which is also the test of that trend line. So I do like a gold upside from here, but the key chart we're looking at is real yield. So as long as real yields keep falling lower, then that should lift gold higher. Do you see the way that these are inversely correlated? Falling real yields, rising gold. Rising real yields, falling gold. So falling real yields, expecting gold to rise. We are also seeing a little bit of dollar weakness in the buy the rumor, sell the fact response to the non-farm payroll. Key risk that we have is obviously FOMC minutes, which are coming this week. So on Wednesday of this week, we have the FOMC meeting minutes. And what investors will be looking for is any clue about how fast the US Federal Reserve is going to taper their bond purchases. Now, if those bond purchases are seen as coming sooner, that will result in dollar strength, and that would negate that gold upside bias. Okay, so this is vulnerable around Wednesday, this outlook. So we need to keep a careful eye on it. So FOMC meeting minutes, and what the market's going to be looking for is any news of tapering. If the market can see that the Federal Reserve look more likely at tapering in meeting minutes, and that's when Jerome Powell started mentioning after the last FOMC meeting about talking about tapering, and that's what sent the dollar sharply higher. You can see here, you just have a look, it was at the June meeting, 16th of June. Do you see how the dollar suddenly rose? That was on Jerome Powell indicating that the Federal Reserve is starting to talk about tapering. Remember, tapering is the first step to interest rate hikes. That's dollar positive. So that means that Wednesday meeting minutes is going to be carefully scrutinized. How quickly is tapering expected to happen? Was Jerome Powell more dovish than maybe some other board members were? Remember the FOMC, they brought the dot plot forward, so they're expecting sooner interest rate hikes. Now, that's the sort of thing that the market is going to really, really look carefully at. So there's volatility risk, for Wednesday, July the 7th. I'll try to cover that and put some stuff up on my blog, just keeping you informed about what's going on there. But that's a key story to be following, definitely, for sure. Okay, let's go and just look at the calendar now. So OPEC meeting still going on, all right? We've covered OPEC meeting, that's the big one. Nothing much else to say about Monday. Tuesday, this is the big meeting. We have the Reserve Bank of Australia interest rate statement. Now, bottom line, let me explain to you what's going on. The outlook for the RBA had been looking quite good. Now, if I just take this here and let's just look to this month, and then we'll go into last month, and you'll see the employment data was really strong for, let me just go back, last month, there we go. Right, look at the employment data for Australia, was fantastic. 115,000 jobs added, and this is the key, look at the unemployment rate, down to 5.1%. Fantastic. Now that had a number of revisions come out from various investment banks saying, look, the RBA are going to be much more hawkish at this meeting. So anticipations rose that the RBA would be more hawkish, but we then had some problems, and the problems are all COVID-19 related. What's happened is that COVID-19 numbers have been soaring in Australia. Sydney's in lockdown, 50% of Australia is in lockdown, and they haven't vaccinated very many of their population. So the Reserve Bank of Australia now has a problem. On one hand, they are seeing low unemployment, but on the other hand, COVID-19 is spreading. So those gains they made, remember how a few months ago they had really contained COVID-19 very well? Well, those gains are risking being lost. So the question that investors are asking, how is the Reserve Bank of Australia going to react? Now, I think they're going to be dovish. This is just my opinion. Here's what to look for, okay? Now, the dovish opinion is if they move the 3-year target to November 2024, that signals a potential interest rate hike as late as 2025. That would be very dovish. If they announce another 100 billion Australian dollars of QE program running for 6 to 12 months, that would be dovish. If they say, you know, we only expect to reach policy goals in 2024, and say they push back and they start saying, well, you know, that good jobs number we had, well, the rise in the virus is going to negate all that. That will be the most dovish outlook, and that would be strong Australian dollar downside. And the sort of currency that I would really like to pair that would be against the pound Australian dollar. I really like the pound Australian dollar long, because there's a diverging outlook now between the UK and Australia. UK looking at coming out of lockdowns, Australia looking at going back into them. The key risk is what the Reserve Bank of Australia say tonight. If they're very dovish, that's a great opportunity for potentially Aussie yen selling, Aussie CAD selling, and pound Australian dollar buying. That's the way that I'm seeing it. Now, I don't know what the RBA are going to say. Obviously, that's just my opinion. The other option is if they're very hawkish, say they surprise markets and say, you know, the recent jobs has been good and we expect to reach our policy goals sooner than previously expected. Perhaps they say, well, you know, and we're not too worried about the lockdowns. I can't see them saying that, but if they did, then, and potentially if they brought forward rate hike projections to 2023, look, remember the US dollar CAD. Remember what they did around April. You see, April, that was when the Bank of Canada brought forward interest rate hike projections to 2023. Look, the CAD gained 500 points against the US dollar in just like a couple of weeks. So the power that there is in rate hikes being brought forward is very strong. So if they're brought forward to 2023, expect the Australian dollar to rip higher, and something like the Aussie yen would be very attractive. Aussie yen upside, Aussie Swiss franc, something like that would be great. The other scenario is balanced, if there's some way in between. So maybe they do a 50 billion asset purchase, they keep the current language in place, they say, you know, conditions for hike will only be met 2024, they talk a little bit about, you know, risks, but they're more balanced. that would just be expecting probably a little bit of Australian dollar downside, but more limited. Okay, so that's what to look for, and it's absolutely crucial this week, the RBA rate meeting, and I really potentially like it. Pound Australian dollar could be a great trade. That's one personally that I'm personally looking for. Again, that's not trading advice, but I'm just explaining it to you how I go about making trading decisions, and so hopefully that is helpful for you going forward. Third, we've got Bank of Australia's Governor Lowe speaking. Now remember, that's always helpful. Whenever you have a central bank governor speaking, investors look to see for any clues. Now, what happens? The governor will speak after the rate statement, and you see that's an hour and a half afterwards. So the governor looks at how the market reacts and then can tweak their statement if the market has responded the wrong way. Similarly on Thursday, Governor Lowe will give more indication. That's risk for the Australian dollar. We've had the FOMC meeting minutes. We've covered those on Wednesday. And then Friday, we got some Canadian job data, as well as Bank of England Governor Bailey speaking. So that's potentially significant for the pound. And we also have general sort of industrial data out for the UK. If that's strong and the UK is expected to keep seeing strength, and I could see some good pound for the strength for the rest of this week. We'll have to see what PM Johnson says later. CAD, remember the CAD, Canadian dollar, has seen quite a lot of upside recently. And you can see that the CAD is just showing a little weakness against the US dollar, with the US dollar strength story coming back in. So quite neutral US dollar CAD at the moment. Okay, folks, what else is there to say? Yeah, one lesson to learn here is just technical lesson. You can see here you see this Euro US dollar bar. This is the daily chart. This is called a bullish pin bar. Let me teach you about it. This pin bar has a close which is inside the body and above the body of the previous candle. The tail is double the length of the body, and you see there's this space here. If you look to the left, you see space. That is a bullish pin bar that's showing a technical reversal pattern, which technically opens up the way to 1.1900. So that dollar weakness is being reflected here in a technical pattern. Now, we also pointed out the false break of the Harami inside bar. Do you see here? You have the Harami inside bar, which is an inside bar with the body inside the mother candle. We had a false break, move lower. Here you have a Harami inside bar, false break, move lower. And we had another one, Harami inside bar, false break, we move lower. 3 false breaks of Harami inside bars in a row. Okay, so technically, Euro US dollar chart trading quite technically. That was, potential sell signals. This is a potential technical buy signal. We are neutral in the dollar, but you would at least expect a test up at that 1.190 region. So just looking at that technically, it's a good technical lesson to learn. And I'll show you another one on gold. You can just see here, you've got Harami inside bar, false break of Harami inside bar, and you expect that to move higher. You see here, you have a false break of a Harami inside bar, gold prices moved higher. You see how that works? The false break of the Harami inside bars can be very, very reliable kind of signals, can really give a good indication of where price is going. And we can see here that that false break of that region here was on the disappointing non-farm payroll. We are expecting a pop up into that 1816 region, and stops can just be placed below that 1746 area. Okay, folks, do ask the question. Don't forget to use the chat box. I hope that's all clear. I hope we all know what we're doing this week. A lot going on. Gold looking interesting here. I definitely like that gold chart, and looking out for OPEC plus. Not interested in buying at those highs. Want to see a pullback to 68. Folks, I hope that's been useful. Don't forget you can use questions, use the chat box. If there's anything you're not sure of, follow my blog. Don't forget to be there. I will be updating my blog, local live analysis, and going through various different scenarios. You know, there's the pound Australian dollar long outlook that I potentially have, looking for that potential enter on a break of the pound Australian dollar. That's one to check out. It's there in my live market analysis, so do get there. You get a little bit more information on that. Okay, folks, it's been a pleasure as always. I hope everybody's doing well. Good to see so many good friendly faces here today, and I hope you have a really good week and a good rest of the session. Don't forget, we're back on Wednesday, and on Wednesday we'll be looking at some more technical lessons as well as looking what the current sentiment is for the day. Take care, everyone. Thank you very much. Goodbye.